Hello, this is Paul Whitley with CEO Talks, and I want to thank you for joining us today. We're going to be talking about research and development tax credits, among other things. As we talked about before, we have a group called C-Suite Support, and we're a group of fractional CXOs, CFOs, CMOs, CHROs, CEOs, etc., that work with companies and help them try to grow their business exponentially. So today we're going to be talking with Tax Credit Collective with Joshua-Massoud and Lindsay-Polyak, and our subject matter is about tax credits and something that many companies have no idea that exists. So with that, I'd like to turn this over, and Joshua, if you would tell us a little bit about you and what you do in Tax Credit Collective, and then we're going to give the mic over to Lindsay, who you don't see right now, and let her pick up some of the back end of this.
Absolutely. She's the better half of the business, so we definitely want to get her roped in. My name is Joshua-Massoud. I'm a tax attorney here in Dallas, Dallas native, grew up in Wiley, not too far from here. And we help companies identify and capture tax credits and government incentives, simply put. There are over 10,000 different federal, state, and local incentives available, and we give you the tools in order to capture those effectively and efficiently.
Lindsay, can you add into that?
Sure. We see a lot of business owners that do all of the right things in their day-to-day work in their businesses, and they don't realize that they have opportunities to capture tax credits for work that they're already doing. So we're often looped in by their CFO or their CPA to help identify opportunities that they may be sitting on, leaving money on the table with the IRS or other taxing authorities.
Thank you, Lindsay. One of the things I'd like to point out is that I personally have 4 companies that I'm working with R&D tax credits with Lindsay and Joshua as we speak, looking to bring in another one. And the estimated tax credits probably are a little over $300,000 with companies that never knew that they had an opportunity for those tax credits. So Lindsay, starting with you, why are you qualified? What makes you able to do this when other people don't?
We take a holistic approach to looking for all incentives, not just one, because there's a lot of incentives available. Joshua alluded to about 10,000 tax incentives. So we have the experience to look for what's there, and we are local to the Dallas area and provide partner level service to fit hand in glove with the work that their CPA is already doing. So we really mesh nicely with the team that they already have in place.
I know that you're on the front side to talk to the companies about this, but then we have the back side with, we got to have that legalese and the attorney guy that every time I ask him to record something, he says, I can't do that. Joshua, what are your qualifications to do this?
Sure. So I've been in the tax credit space since 2007. Graduated from St. Mary's School of Law down in San Antonio, and this is all we do, 100%. We don't venture outside this area. We are the surgeon that is brought in by the general practitioner to focus specifically on this area. And so from the start to the finish, if it ever gets in the audit cycle or examination cycle, we handle everything from soup to nuts.
Okay, what are some of the biggest challenges companies have right now?
Right now, belt tightening is the number one thing that people are looking to do, and we've got to figure out ways to get more from our existing services, look at specific line items on our financial statements that need some belt tightening, and then identify specific operational efficiencies that we can improve. Now, I can help you with one of those, and that's the line item number. If you're paying tax, there are opportunities to reduce that tax burden by identifying these specialized incentives.
Jeff, last week you alluded to the things that needed to be belt tightened. You want to add to that?
Yeah, I mean, as we discussed last week, liquidity is king. So, anything that a company can do, whether it's belt tightening, additional revenue streams, access to capital, access to loans, the liquidity right now, I think, is really a focus, to say it bluntly, just to stay alive. And a lot of companies are adversely affected by COVID, some not so much, but to me, the liquidity, which includes reducing a tax burden, whether it be income tax or sometimes even payroll taxes, there's options available to other programs coming out, which you know better than I, that are there to help liquidity.
Thank you. And for those that have not met Jeff, Jeff and Jim are both members of C-Suite Support. They're both fractional CFOs. We work together on multiple items, multiple companies. And I've asked them to join us to participate as well as share some comments that they have. Jim?
Well, the timing is unbelievably fortuitous here because I am working on a company now that has intellectual property that's probably in the cumulative of something like $25 to $30 million is being transferred from a C Corp to an LLC. And it is the value of this entity. And we understand that there are tax credits and possibly R&D credits as well. So this is a spin out of a very well established company that has purchased and developed patents and is now commercializing this portfolio in an LLC. Will be converted to a C Corp when we go public, but addressing the timing and the amounts is going to be very important to us. And I did not plan on this. Paul said,
I had him in the neighborhood.
Paul told me to come on board, but it turns out that the timing is wonderful.
Well, Jim Chamberlain is also a member of the C-Suite group, and the three of us are also members of the Fort Worth Entrepreneur Organization and work with companies in that group together. In taking this further, Lindsay, why would a company even consider spending money with Tax Credit Collective right now?
Well, our proposition is really simple. We're not going to charge them anything if we can't find them credits. And we simply take a percentage of the credit that we help them capture.
Okay, so if they don't get anything, you don't get anything. If they do get money back, then you participate in the reward. So that makes sense. So there's no money up front, there's no cost to them, and they have an idea of what they're going to be paying you in the event they get credits. So tell me a little bit about that, Joshua.
Sure. So our process is designed to root out very quickly, are there credits on the table? And once we pass that milestone in our first phase, then we proceed to phase 2, where we do the more rigorous documentation, proving up and substantiating those credits. And then we take a percentage of the credits that we're ultimately able to substantiate and identify. So until we get down that road, there are no charges to the client. And even if we get into the phase 2 where we're documenting those credits and something comes up where it would otherwise prevent the client from capturing those credits, we'll walk away. If we're not benefiting you, we're not here to charge fees for that type of work. That's just not our model.
Jeff, what is an R&D tax credit? There's a lot of people that are going to be watching this that are going to think that they've got to have superhuman programmers in the back room and they've got to be building this micro chasm of products that's just not true. So share with us.
So, like you, I've got fractional clients, and when I got involved in R&D tax credits, I was shocked to find out that there's a difference between splitting subatomic particles and doing cold fusion and what I would call innovation. And you're better served to talk about this than I am, but it was surprising to me, and I still have one of those CPA things, so it was surprising to me what really did qualify, and something that you would look at as either an accounting or finance professional thinking, gee, that's just not enough IP there to get a benefit from the government, when actually, we were fortunate that particular client was actually doing subatomic particles, but they also had other business lines that then once we cast the net over all their different platforms, that they had multiple applications that were available for the tax credit.
Absolutely.
One of the things that I'd like to point out right now is that all of these expenses we're talking about, you get to expense them. And then you get to file for the tax credits. So they don't compete with each other, and it's something that you probably need to look into. So turning that back around, Joshua, share with us some of the things that we probably as an entrepreneur wouldn't immediately think about to be a tax credit.
Sure. I like to think of tax credits and tax incentives, stepping away from the R&D tax credit box just a little bit, one step back. There's activity-based incentives. Are you doing stuff and things that the government likes, so they want to incentivize it? Sort of the opposite of a sin tax, right? We don't like it when lots of people are drinking too much alcohol or smoking cigarettes, so we tax those. This is the opposite of that. We like you developing stuff, so we want to incentivize that type of behavior. Then there's hiring-based credits. We want you hiring. We want that unemployment rate low, so we're going to implement tax credits so that you continue to hire people. And then there are property-based incentives. We like the improvement of property. So there are a suite of incentives aimed at that property and the types of improvements that you're doing. So when we take it one step down, going back into the R&D tax credit, there are a host of activities that otherwise qualify that most people aren't really prepared to acknowledge that qualifies under the tax code. If you go back to the history of the credit from the 1980s, Reagan implemented this when Japanese automakers were simply savaging American automakers when it came to incremental improvement of the car. No one's reinventing the car. It's got 4 wheels or more. It moves on a road, what have you. But that incremental improvement to the braking system, to the design, friction, aerodynamics, all of that good stuff, that's what he wanted to incentivize, that incremental year-to-year improvement, not reinventing the wheel. And that's what this credit is aimed at. So every time you make your widget or Pfluger binder a little bit better with a process to make that a little bit better, or add a function to your software, build a building, come up with architectural designs for that building, but improve the layout and make it specific to that client's needs so that they can use it in the most efficient way possible. That's the type of activity that this credit is aimed at.
All right, and Lindsay, would you say you run into a few companies that have no clue of this when you start talking to them?
You know, most people think that if they're not in the laboratory, wearing a white lab coat, holding a beaker, looking at a microscope, that they're not doing research and development. But what we find is that companies are doing this incremental improvements to processes, products, formulas, inventions, softwares, or techniques. And so that's what we look for.
Outstanding. Well, in this current day and age of COVID, what would you tell us or talk to us about besides going to get money, which we all want to do, that we should be looking for?
Well, in terms of a tax forecast, I think you should be aware of 3 things. Revenues are down across the board, so that's going to lead to the belt tightening things that you need to look at to implement. But that also means that tax revenues are going to be down on the federal level and the state and local level. So that means they're going to be tightening their budgets as well. But that's going to lead to something that I don't think a lot of people are anticipating right now, which is an increase in audits. So when you have an increase in audits, you need to be prepared for that. So if, for example, I'm aware of the R&D credit, I've been taking it for years, and you've been rolling forward that same study for the last 10 years and not acknowledging all of the case law that has come out, the body of case law that has come out, and all of the regulations, and haven't updated that, now would be a really good time to do so, because they're going to come after a lot more people now. Audits have historically been down. We've cut the IRS back a little bit, but I guarantee you that's going to scale up into 2021.
And what do you do about that?
We implement the same process that we have been, updating that with case law, identifying new cases. There were a couple of new cases at the start of the year that were very important for engineering and construction clients. We update our model accordingly, but we've always taken a documentation-based approach. I come from the legal perspective. I'm the one defending it, so I'm the one in front of the agent. I'm not just the salesperson, I'm not just the project manager, I'm also the audit person. I've got to be able to stand in front of that agent. So if I'm going to be, we're going to do it right.
So restating that from my clients, if one of my clients choose to do business with you and they do qualify for tax credits and they do get audited, what do they have to do?
We're already done. We answer all of the 19 questions that the IRS would otherwise ask as part of their super information document request that they rolled out in 2007. We already have all of that prepared. So there's no going back to the client for additional information. The IRS may want some additional interviews. They may want to spend time with the client, look at some documentation and records, but almost all of that is going to be pulled up front.
And if that happens, do you represent them?
100%. We're there with them hand in hand.
Okay, well, Jim, from your standpoint, if you had a client that you were dealing with having that back end audit protection. What do you think about that?
Well, I think that's huge, and there's a lot of, I have some, actually some very specific questions, probably
Okay.
we're not gonna be able to take care of here, but part of what I'm part of the planning process for this entity that we're spinning out, and it's gonna have losses for probably the first 2 years, which will flow to the members on a K1, but we're gonna be profitable in year 3. Probably convert to a C Corp because of the tax rates, with the new tax laws, that's a lot of, these very profitable LLCs are converting. So I'm kind of curious to understand can we accumulate the tax credits to take it as a C Corp, or they have to flow to the members on a K1?
It's a great question. It is a specific question, but I think it applies to, there have been a lot of changes in ownership lately because
and
of...
I'm not a tax guy.
So when you have a flow-through situation, partnership, S Corp, what have you,
Right.
the credits are owned by the owner.
Cool.
They flow out to the owner. And so
Okay.
when you do a conversion to a C, those credits unfortunately are locked in with the owner at that point.
Well, that's fine. We
Yeah.
need to know that, so that's.
But you also noted something else, that when you start this new company, it's going to be its own new entity, new trader business.
Right.
There is a provision in the tax code that was added in 2015 that allows you to take that tax credit that's otherwise an income tax credit
Right.
and apply it against payroll tax.
Oh, beautiful,
So-
because all of our costs are people costs.
There you
It's
go.
a software company, and that's, I'm glad I'm here.
And that allows a much quicker impact, because
Oh,
normally you'd file your annual tax return, then you'd go through the scrutiny process
Good
and then
point.
get that. So, and none of my clients file without the extension. So, I mean, you could really look at a credit maybe 2 years down the road from when you incurred some of the expenses. So to me, that provision is great because you monetize it much quicker.
Absolutely. You capture it on your subsequent payroll tax, 941, the very next quarter.
And
That is
following that up, one of my clients right now is a disruptive SaaS company, and they're still in the growth stage, they're still in the burn stage, but guess what? We've got a lot of payroll in there. We just talked about that. So
beautiful.
we're filing to get those payroll tax credits back until they go into the profit side of this equation. So it's something to do regardless of where you're sitting in your current company, whether you're in the startup stage, whether you're in the burn stage still, or you're into profit. This is real money, and it comes back to you from the government. So that's the kind of thing that we want to talk about. What do you think is going to happen with the current environment, political environment? Where do you think this is going to go in near-term future?
As far as tax, I mean, you've got to be concerned. I'm not being very apolitical here. We're either going to have Biden or Trump as president, and Trump is very pro tax cuts. So you would look at direct cuts to rates in those instances, probably further cuts to rates. Biden is going to be a little bit more nuanced. He's going to increase taxes on certain groups. And he's already published his tax proposal as of yesterday. So we have information about what that looks like. You just need to be prepared either way. I'm not here to comment on the politics of it. I'm just here to deal with the ramifications, right?
Okay.
And-
Well, the tax rates of the company is going to be one factor. These things improve the companies unless, so hopefully they will continue going forward. And one of the big things is, and I'm going to turn this one to Lindsay,
Okay.
bring her back in, is what can you do about filing? You haven't done it for 3 or 4 years. You didn't know about it. What do you do, Lindsay?
Yeah, so companies that have been profitable up till now are likely going to owe a lot of tax this year. And so we want to make sure that we look back. And this credit allows us to do a look back up to 3 open tax years where tax has been assessed. So if they haven't looked into this before, we can go back multiple years and help them capture credits. And these federal credits are refundable. So IRS sends checks. And that can be a great cash infusion for these companies right now when they need money. So let's focus on getting money from the past and then use it to go forward.
Right. That's one of the things that I'm seeing and talking with my clients on is that, yes, we're here, we're getting taxes, we're going back and getting taxes, but this is a gift that keeps on giving. this, if you're doing research and development, and keeping in mind that's not a programmer in the back room, it's a process credit as well as the person in the back room, you may be able to continue having tax credits accumulated from this point forward. So it's well worth looking into, talking to people like Joshua and Lindsay, and hopefully to Joshua and Lindsay. But in all cases, get with your accountant. Now, I'm going to share one quick story, and Joshua and Lindsay are part of this story. I picked up a new client last year, and I'm going through their tax returns, and they're very heavy technology. In their case, they are building the back end. And I asked them about the tax credits. They didn't know about them. I said, why don't you call our CPA firm? I did call the CPA firm and talk to the head of the firm. And the response I got back from the head of the firm, we will not name the firm, was, I've heard of those. We don't really do anything with that here.
That doesn't surprise me.
And so I'm bringing that around to awareness that not everybody knows, not everybody is aware, not every CPA firm is involved in them or has done work with them. So take the information, do your own research, or contact the C-suite support people, and we will put you with Joshua and Lindsay to see how we can move this thing going forward. What do you say to that, Lindsay?
I look at us as the heart surgeons in the tax space. CPAs do a wonderful job, and they are generalists at taxes. And so we come right alongside them to help them and their client capture tax credits and provide additional education to CPAs. So our goal is to make this information more widely known and to get it into the hands of taxpayers as much as we can.
Appreciate that, Lindsay. And you brought up something there that I'd like to bring up about C-suite support and the fractional CFOs that we have here. As she alluded to, the CPAs mostly work with your tax information. They give you tax advice. They may look at your internal information once a quarter or once a year. We as fractional CFOs, we do quite a different story with you. We come into your company to help you find the tax benefits that you have, to help you get your expenses reduced. We're also looking at how we can save taxes for you for the year. So in addition to bringing you funding, as Jim alluded to earlier, and we'll talk about that in a little bit more, we will help you in your capital stack, meaning we'll help you find equity, we'll help you find investors either for new projects or expansion project, as well as we'll help you with banking situations to get you in position to go. And a lot of companies really aren't there. And just recently, 2 days ago, in fact, I'm talking to another member of the group, a gentleman by the name of Tom Bronson, and his entire job is to help companies figure out what they need to do to prepare for sale or for evaluation or for investors. And he's done over 60 of those in the last 5 years, and I think over 100 entirely. So we're talking about how we get prepared to do that. And we can come in at a fraction of the cost of having a full CFO on board and help you get through there, as well as monitor your internal financials. So we're going to turn around when we don't know what the laws are, because we're not attorneys. Joshua's an attorney, so we turn to Joshua. Lindsay, knowledgeable of the systems, we turn to them. So Joshua, what would you like to wrap up with as far as what Tax Credit Collective can do and where we can go with this?
Sure. Conversations are free. And if you're looking for ways to identify cash in your business right now, tax credits are a great way to go. You may be eligible, you may not be, but we'll get to that very quickly and early on in the conversation so that we maximize your time and maximize the value that you could get from these programs.
And I'd like to follow up that with the CFOs of C-Suite Support. We have a pretty knowledgeable area of these tax credits. So we're going to be looking for them and trying to direct you to that. And again, the fact you're not going to pay anything unless you're getting money back. It's a no risk, all reward situation. Jim, do you have any thoughts on that?
Well, no, I just think that one of the things that the service that we can provide, as opposed to the CPA firms that do auditing, not always the taxes, but Our charter is really to increase shareholder value, and you do that by growing and growing profitably and planning. And so we're sort of the forward-looking guys in looking at cash flow, and if business is self-funding, you don't need external financing, but very few businesses are. So we put together the capital stack and facilitate that sustainable growth, and the taxes are a big part of that. So you're my man.
Jeff, you got anything to add to that?
Yeah, you know, as we discussed 2 weeks ago, I've been doing this for 20 years, so it becomes more of an art than it does a science. And what we do that's differently, in my opinion, is we're objective. We come in, we look at things, we quickly analyze them, we're objective, but yet we have these resources like here, and to our other C-suite partners that may be a CMO or a COO, is that we have a stable of people available to us with that specific expertise, whereas we may have a little bit more general knowledge in some items and more deeper expertise, but we come in and get our hands dirty. So I just want, wrapping up this subject, one of the things that was a surprise to me as I was doing R&D tax credits is I got a question from a client of, well, what happens if my experiment doesn't work? And the reality is what we were told, I'd like your opinion on this, is that if it doesn't work, that shows it's even more IP in the government's mind. So we did this, it didn't work. We did this, it didn't work. And then we did this. Well, then they, you know, our consultant at the time says, you know, you failed twice, but the third time you were right, you're golden now.
Failed R&D is great for our purpose. It's bad for business, generally speaking. You don't want too much of it, but it's great for the credit.
But it doesn't preclude you from getting the credit just because it didn't work out the way you thought it did, or candidly, commercializing it at all.
Absolutely.
Well, Lindsay, I'd like to ask you, you and I are both members of a trusted advisory group for a bank here in town. And your experiences with that group, what would you say that the best way to get the word out to everybody about R&D tax credits?
I think realize that we're going to have some ups and downs over the next year or two. We can't predict what they are, but if you're in business, you are in manufacturing, software, architecture, engineering, agriculture, oil and gas, you need to take a look at this and see if you're potentially sitting on some cash that you can use right now.
Appreciate that. Well, wrapping this up, CEO Talks, and again, Jeff Worley on the end, Joshua-Massoud Chamberlain, and by video, Lindsay-Polyak.